Good morning, everybody. I'm Ed Parcaut with Mike Kelly, and we are Real Estate Jerky Daily. How's it going, Mike?
Going well.
This overall weekend wasn't so bad. It wasn't so hot. Saturday actually turned out to be a nice day.
Yeah, actually Sunday was too. I was helping out the Kiwanians with their beer booth Saturday and Sunday over at the car show. A lot of cars,
Yeah,
a lot of people.
usually is.
Yeah.
It's a good time. I didn't get there because unfortunately I had to work on Saturday, and then technically I had to work on Sunday.
Yeah.
Yeah.
Family work.
Yeah, just leave
Family
it.
work happens.
Kids get one move after they move them.
And then
Sydney's done hers.
it's all on them.
And then what's his name? Blake's done his.
What's his name?
Yeah, well, I told you I'm tired. That's why I took a call yesterday around 5 from a vet.
Yeah.
Normally I wouldn't on Sunday, but I'm like, I didn't have a weekend. So what's going on?
Yeah.
And basically, we'll get into the numbers, but before we get anything, I do it. VA loans is my specialty. And, what everybody thinks about debt to income ratio. Well, VA loans works off of reserves, not debt to income ratio. So
Right.
It's not about, is it a 56 back in ratio? We don't care about that. What's the reserves? I've had it as high as 83.
Wow.
Yeah. I
'Cause they
can't
had
do a
plenty of
117.
reserves.
Yeah, I couldn't do a 117 the other day, but
It's pretty high.
yeah. So, so that's what you focus on is the reserves. So you just have to figure out how many people in the family, do all the calculations and see what's reserves required. There's a chart that says you have to have over this dollar amount. So
Gotcha.
as long as you match that or have more, then there's no issue.
And I do all things residential real estate sales, but I'm a certified probate specialist. So if you need help with that, I'm here to help you.
Yeah, because that's important. Also, if you go through a divorce, please identify the property and deal with it during the divorce. Because if someone passes away, it turns into tenant in common, and it's got to go through probate.
Yeah,
after
don't
and
do
it's
that.
very costly. Because I just had one of those just happen, and I can't even get the damn refinance started because everybody's waiting for all these documents.
Exactly.
And it's like,
and those are going to take some time.
Well, most of them done, except for, the attorney's not real fast on these things. The probate attorney's like, you know what, I'll get to it when I wake up.
Exactly. If I wake up.
It's like, come on, I need the damn PSA, and that's not for a prostate exam.
No, it's not.
Yeah, and I'm like, I need to finish this. I need to get this done. People are leaving on the 24th, but do they care? No. Move on.
No, they don't.
All right. So inventory went up nationwide last week, another 6,600. We're now at 611,596, which is pretty much a record in the last 3 years.
Yeah, it really is.
Even though normally at this time we're 1.2 million. So, but so we're half still of where we are in a normal market. And I don't know what's 600,000 into 3.8 million, because that's what our high of the ever was.
Exactly. But things are looking up.
Well, there's more opportunities right now. Remember that opportunity bubble I talked about, I don't know, a year ago, a year and 6 months ago in January, where, hey, I could ask for some closing costs. Guess what? That might be there again for you in certain locations.
Absolutely.
I definitely know of in Tuolumne County it's there because for some reason they're getting nervous, and they shouldn't be getting nervous. Things just move at their own pace.
Yeah, they kind of do.
It takes them on average 6 months, even during the best time, to sell a property. During 2020 and 21, when everybody's like, I'm getting out of the city.
Yeah,
they'd sell them in days. Well, that's unusual.
Yeah,
very unusual.
It's not usual.
I'm sorry. Am I making you go to sleep?
Gosh, I guess I'm tired from the weekend.
All right. So this week we have, basically a lot of inflation information. And, so we have Tuesday, we have small business optimization. Hello, optimism. I need to go back to bed. And then 10-year auction, Wednesday, mortgage application, CPI, consumer price index, Fed meeting, Thursday's producer price index, initial jobless claims, 30-year bond auction. And then on Friday is University of Michigan consumer sentiment, and that's going to tell us. So this week is huge with those numbers.
University of Michigan's going to be busy.
Yeah, I had somebody reach out to me because I had them qualified here because they were moving. They're like, hey, we decided to stay, can you do the loan here in Michigan?
Oh no,
I wish I could. I wish I could.
Yeah.
Well, that's like, there's got to be a way. And I was talking to somebody else because before the pandemic, as psychologists, you can only do stuff in your state.
Right
Now, ever since the pandemic, you can do it across all the states.
as a psychologist.
Yes. So he's like, well, maybe they'll change it for you. Nope. They'll never do that. That'd be too smart, because it's not like we're not the same licensing everywhere and the same requirements everywhere. Why don't we just do one nationwide license and be able to do it everywhere?
I agree.
But every state wants their money. That's the issue.
It's all about income raising.
Yes, right. So Corelogic reported the end of quarter of 1 of 2024, home equity increased by 9.6%, or 1.5 trillion from last year. This is due to the magic elixir of appreciation.
I forgot that was magic.
Yeah, well, that's what inflation does also. It makes people who own homes richer.
Yes.
And if you own a lot of homes, you're even more richer.
You're more richer.
Yeah. Homeowners on average have 40 times their net worth of renters. Homeowners have an average of 40 times the net worth of renters.
Yeah.
And it all starts right now by getting into a property that, hey, it might cost you $600 or more a month to get into that property. But over a 5-year period, eventually that curve will change to where it's cheaper to own than rent.
Yeah, because you'll be building wealth.
Correct. Negative equity decreased 16% year over year. If home prices rise by 5% this year, over 100,000 homes will regain positive equity. That's saying like in Florida and other places where you had insurance issues, or they've dropped some value, but not everywhere. I mean, it's a state by state issue, and really it's a red or blue state issue.
Yeah. And even though we're kind of a blue state, we're still seeing a lot of appreciation.
Well, it's because everybody loves the weather here.
Yeah.
They hate the politics, but love the weather.
Exactly.
I mean, we hit 100 and it's hot, but it's not, oh my God, it's 80 and I'm sweating everywhere.
Yeah. You don't sweat in the shower.
So one thing they're looking about with the CPI this week, because that's a consumer price index, they're really looking at it. It's probably going to show very little progress on inflation.
You think?
And yeah, that's what they're worried about.
Okay.
We've already seen that we've given back some numbers since last Friday, because the Bureau of Labor Statistics report came out and said, hey, unemployment numbers are really amazing. People had more job created. And then the sentence later, it says, when we called everybody at home, there was 405,000 jobs lost. So it was a kind of messed up report, but it messed up the market.
Wow.
So, and because we don't really know what's going on. You get one that says, hey, we actually have 3 reports that said, hey, it's getting worse. And you have one report that somewhat says it's getting better, but then says it's getting worse, and it still messes the market.
Right.
So they're expecting a headline or an inflation to outcome of 0.08 0.8%, which is pretty low reading. But if you look at the figure year over year, because we had things go lower last year, it's not really going to change much. And if that's the way it comes in, we'll probably just stay where we're at. But if it gets worse, like the numbers are really missed, like it's, more than that, it's really going to mess with the market.
We don't need more messing with the market.
Nope. And that's pretty much all I have for today, except what we talked about originally. If you're doing a VA loan, reach out to me. If you need a VA loan done, please reach out to me, because I do know them like the back of my hand. Oh, look at that mark. I didn't know that was there.
I didn't know I scratched myself.
Oh, I do know I scratch myself. When you're moving shit, you always
always scratch yourself.
But it's just like, just like the question that the people had this weekend, they go, we got a high DTI. I don't care. I want to know what your residual income is.
Yeah.
And then
what's left over in your bank's account.
Right. And even though we say we can do VA has no FICO score, 580 and below, 580 is just an ugly interest rate.
Right.
640 or greater is such a better interest rate. But, we can do those numbers, but it's like, let's see what we can do to get that rate up.
Right.
I mean, your FICO score.
Your FICO score. Pay off something or pay down something.
Or the easiest way, just get added onto somebody else's credit card that has a low balance, a couple of them, and for a short period of time, and there you go right away. As soon as it reports, you're good to go.
All of a sudden, there you are.
Yeah, and there I go.
Well, I'll have numbers on Wednesday and Friday as usual, and maybe I can come up with something to say tomorrow.
Well, it is Tuesday.
It is Monday.
That's today.
Yeah, that's today.
All right, everybody, make it a great day. Thanks for being here. We really appreciate you, and enjoy. It seems like everybody's out enjoying June this month.
I hope they are, because I didn't do that last year. We need to enjoy the summer while it's here.
Yeah, because it's gone, and then the next one, and you're a year older.
I know what.
Help me out, Johnny.
And things get slower.
Yeah.
Everybody make it a wonderful day.
Yep. We'll talk to you tomorrow.
Bye.
Bye.